Hello and welcome to the Wealthy Trades Daily Market Forecast for April 15th, 2015. It is tax day. Everybody loves today. Well, not so much. But anyway, let's get rolling. Let's kind of recap what happened yesterday. There was a lot of some underperformance in the NASDAQ, outperformance in the Dow. So interesting. We've got the futures right now up quite a bit. Intel comes in with decent results. They actually missed on the revenue numbers, which is a little interesting. We got to pay attention to that because if we get a slowdown in revenue numbers, it could signal things to come in the future as far as growth goes. Because here's the thing: you can manipulate the earnings per shares by buybacks and different things like that. You cannot manipulate the sales numbers or the revenue numbers. Those are the real numbers that you need to look at. So interesting. The market is up though. It looks like it'll open up a little higher. Let's talk about yesterday. Yesterday, the core trade was about break even. We went long A and short XLP. The core trade was actually down about 0.07, so pretty much break even. But the downside low, if you remember, the A was the best stock, and what you could have done is you could have added to your position at 42.69. You could have added to your long position there, and then actually it ended up rallying up, and you would have made right around 25-30 cents on that trade. So overall, if you took the counter trend trade when it traded down to that 42.69 level and added to the position, overall you were maybe actually slightly up yesterday. Between break even, down slightly, or maybe break even or up slightly, depending on what you did. I actually took both trades on A at the open and at the expected low. So decent day. Again, some chop, nothing huge, but let's see what we're gonna do for today. Market trend quality, because the market is. Again, it's up, and let's go into the SPY real quick. It is up, and as I've been saying, I think I sound like a broken record because it's like I've been saying this for a very long time. The SPY, which is the S&P 500 ETF, is sitting at a key area that I think we're going to get a breakout from, and I think we'll probably bounce off of this area and then put another leg higher. Ultimately, I see this market rallying pretty aggressively, probably for maybe even the rest of the year. We may struggle in late October, or I'm sorry, late August into September. We over the last few years, that's been kind of a struggle area, going into that kind of fourth quarter. But anyway, let's talk about today. So again, I very bullish, medium to long term, at least over the next 6 to 12 months. I do think we will get to a point of over exuberance, and you'll need to really protect yourself. Right now, protection is good because you can buy puts that are pretty cheap, but I'm going to be doing an options course. This is just a little shameless plug. I'm going to be doing an options course that is going to be a jam-packed options course, and it's going to be absolutely amazing. It's going to go into how do you use the levels to win data to find undervalued or overvalued options. How do you sell credit spreads? How do you use this information to sell credit spreads? How do you use this information essentially to do covered calls in the right areas? It's phenomenal. It's going to be a huge course. In fact, it's probably going to be a course that other companies would sell for $5,000-$10,000. I'm going to be giving it away absolutely free, 100% free, to those members, those 1,000 members that sign up for our membership. And the first 1,000 members, you get that discounted rate, that substantially discounted rate. It's $74 a month compared to $99 a month once we get over 1,000 members. Not only that, but once I'm done with this course, this options course, you're going to get it free. And this course, like I said, it's going to be jam-packed, and it's going to be worth thousands of dollars. In my opinion, you're going to get it free, and we haven't put a retail value on it after we get it above 1,000, but we're probably going to be selling it for a minimum of $1,000. Okay, and for those members that sign up right away, the first 1,000 members will get that course absolutely free. So I highly recommend you sign up so you can get that discounted price, that $74 a month, and so you can get access to our options course. It's going to be well worth it. Trust me. Okay, so anyway, today we are in an uptrend. I am looking for a good rally today. What I want to do is we want to go into the dashboard. The quality is still under 50%. It's almost right at 50%, but it is still under 50%. But what we're going to do is, so we're going to look for a pairs trade, but I'm going to because the market environment, I talked about this yesterday, because the market environment, we've got all the sectors in an uptrend. It's hard to find a good shorting opportunity when all the sectors are in an uptrend. So here's what I would recommend doing. I will look at a pairs trade, but instead of doing a pairs trade, like I said yesterday, what you can do is you can take half your position size. So let's say that you have a $10,000 account, or it doesn't matter how big the account. If you normally put on $10,000 positions or whatever, cut that in half and use half that position and just go into the best stock or best sector. But anyway, we will look for a pairs trade today too. But XLE is the best sector, so I'm going to move the stocks in the best sector over into my portfolio, and I do that by hitting the plus arrow. Then I'm going to go into my portfolio and I'm going to do my drill down analysis, essentially eliminate anything that doesn't make money on both sides. So what this means is PSX closed at 77.83 yesterday. And so the expected high today is 78.64. The expected low is 77.12. These two numbers here, the expected high and low, are the same distance from the closing price yesterday. But this shows you, and I keep pointing this out, but it's important, this shows you the power of the trend. It hits the trend side 51.9% of the time compared to 40.4% of the time on the counter trend. That shows you the power of the trend. Now, what I want to do is I want to make sure that so the levels to win profit, what this is telling me is when it hits this level historically, on a Tuesday, or I'm sorry, on a Wednesday, when it hits this level, then does it typically hit it and continue to go higher in the direction of the trend? If it does, it makes money here. I also want to know when it hits this level, does it bounce off of it and close higher? And because we're in an uptrend, if it makes money, then yes, it does. So this one meets my requirements. And again, I'm just looking here, and I'm going to eliminate anything that doesn't make money on both sides. So I'm going to go through this. So Hess, for example, when it hits the trend side, so it closed at 74.63, expected high is 75.49, but historically when it hits that expected high on a Wednesday, it hits it and closes lower, and that's not what we want because it's in an uptrend. I know that because it loses money, so I'm going to eliminate Hess. Okay, this is the power of this tool, is putting the probabilities in your favor, finding the best, first of all, going in the right direction, second of all, what's the best place to allocate money as far as sectors, and then the best stocks, and then finding the best areas to put the probabilities in your favor in these stocks. So EOG meets my requirements, DVN good, APA, and XLE. Okay, so all those meet my requirements. The easiest, and so how do we pare these 8 stocks down to the best one? Well, the easiest way to do it is just to find the stock that has the biggest spread between the levels on levels. So levels on levels, trend side to counter trend side, we want a big spread. This tells me how often XLE, for example, closes above this level. It happens 26.9% of the time. It also tells me, the counter trend tells me how often XLE closes below this level. So we want a low number here on the counter trend side and a high number on the trend side. So we want a big spread. The bigger the spread, the better there. So let's compare these two. So we can see XLE has about a 5% spread, whereas APA has a 7% spread. So APA is automatically better. So we'll eliminate XLE. Well, COP is better than APA because COP has over 20% spread. So I'm going to eliminate APA. DVN's even better. It has a 30% spread. So I'm going to eliminate COP. EOG isn't as good as COP. That one's not as good. Not as good. And not as good. So now what we've done is we know the XLE, the energy sector, is the best sector to go in today. We also know that the market's in an uptrend, but the quality is not quite above 50%, so we might want to either do a little bit of a smaller position or do a pairs trade. And we also know that, okay, look at this. DVN hits the upside, so it closed at 66.16. The expected upside is 66.91. It hits that level historically on a Wednesday in an uptrend. So the exact same environment. So historically on Wednesday in an uptrend, DVN hits the upside 53.8% of the time. It hits the counter trend side, which is 65.41. That's the expected downside low. Only 28.8% of the time. Again, showing the power of the trend. So just knowing that information, you know, well, I should probably go long DVN. But we take it further than that. We also know that it historically closes above this level 36.5% of the time. So DVN historically typically rallies pretty aggressively on Wednesdays. Okay. We also know that it hits this level. It doesn't hit that level all that often, and it only closes below that level 5.8% of the time. So if you think about this, this allows us 3 different entry types. Why? Because we know that buying at the open is a good trade because it's in an uptrend and it has a high historical hit rate on the trend side. We also know that buying at 66.91 is a good thing to do because when it hits that level, which happens 53.8% of the time, it closes over that level 36.5% of the time, which is more than half the time. So therefore, it's a high probability trade that it's going to, if it hits 66.91, it's got a high probability of closing above that because of the high levels on levels. And we know historically it makes money there. So buying at 66.91 is also a good trade. On the counter trend side, we know that buying at 65.41 is good too because when it hits that, which only happens 28.8% of the time, it typically bounces off and closes higher. Why? Because when it hits it, it only closes below it 5.8% of the time, which is substantially less than half. So we know that that's a high probability trade to buy there. Plus, it makes money bouncing off of there and closes higher historically too. So let's look at this on the chart. So again, there's just with the levels to win data, just with this information, we have 3 entries. Enter at the open, hold all day long, close at the end of the day. That's a high probability profitable trade or historically profitable trade. But if let's say you don't buy at the open, we'll do a breakout trade and put a limit order to buy at 66.91. Why? Because it's a high probability trade based on the levels to win data. Or do a counter trend trade, meaning if it hits 60, put a limit order at 65.41, because that historically is a great buying opportunity also. So DVN is phenomenal and gives us 3 entry opportunities at the open, at 66.91, or at 65.41. That's what the levels to win data provides us. Entry areas. How do we pinpoint our areas, our entries, and how do we manage our risk? Now let's look for something to pair this with, and the only thing that we could potentially pair it with is the XLV. Technically, the sector itself, the stocks, it's got 55 stocks in it. 69% of those are in an uptrend, but the XLV is in a downtrend. So that's really the only one that we could probably look to pair it with. Again, what I'm going to do is instead of a pairs trade, because all sectors are technically in an uptrend, I'm just going to go lighter position on DVN, half position on DVN. So again, if you normally put a $10,000 trade on, you would only use $5,000 instead of doing a pairs trade. But if you want to do a pairs trade, then you would go long DVN, short XLV at the open. That is the pairs trade. For the week, we are still in the XLV, and the best stock in the XLV that we called out was UNH. And for the month, we're still long in the XLV also. So that is what we're doing for today. I'm a little behind, so I'm gonna get this posted right away. Make sure you go to the resource tab, watch our videos. I'm gonna be posting some updated videos. I'm also going to be working on that options course that I'm gonna be trying to get out as soon as possible. It's gonna be free, 100% free It's going to be 100% free to the first 1,000 subscribers. After that, we're probably going to charge about $1,000 for that course. So sign up right away. I'm also going to be sending out some earnings alerts today. We are still in J&J, but there's a couple really good earnings plays today. So I'm going to be sending out some earnings alerts today. And and let me know if you have any questions. Email me at info@wealthytrades.com. But do not let your trial expire. Sign up right away. Thanks. Have a great day.